Good morning. Good morning. Yeah, I just want to show this. It's amazing the liquidity inducement pattern I got in the midnight when I was in a training class. Got the pounds AUD. I got to look at it at 4:30. I was like, see the move in 1 minute chart. See move in 1 minute chart. What will have caused this news like this? What will have caused this news? What will have caused this news? I was wondering what's happened. What will have caused that news? So I got to check the news. I saw that it was, Australian, the Reserve Bank of Australia trying to release the interest rate. See the move. So I was at the training ground around 4:30 a.m. So got to see this. So I was handling a foreign, a UK-based student now, who recently joined the VIP. And I told him, what spark could this be a news? Let's check this pounds AUD. You can see the spark. See the spark right from display parts. This happened at 3:30. But got to this in Nigeria time is 4:30. We are ahead of this by 1 hour. 4:30 a.m. So you got this, and I quickly rushed down to check the news, and I got this information from investing.com. Let me check if Fresh Factory didn't come up. Then I was trying to check if Fresh Factory. Oh shit! I was not sharing it. I realized I was not sharing the. Yeah. All right. I was not sharing the. I realized I was not sharing the stuff. Yeah. This is MetaTrader. You see the move. See the move. Very fast. See the layer. See the move. Almost about we move almost about 97 pips move spark. What will have happened? I got straight to check the news. What this spark is? What's back? I'm ready to check the news. See big manipulation above the highs, and play rush down to check the Forex Factory. Got this Tuesday, February 1st, 4:30 a.m. Nigeria time. See it? Interest rate of Australia released by Reserve Bank of Australia, RBA. So it was released. This is the previous data at 0.10%. Then the forecast, the aggregate opinions of economists, they expect the value to come at 0.10% as the same thing as the old data. Now, the actual news was released, the data was released at about 4:30 a.m. and it came out as expected, not worse than, but as expected. So that means it's a positive impact for Australian dollar. So the Australian economy needs more funds than and the interest rate has not changed. So it attracts more fund inflow of foreign funds into Australian economy. So it will be a boost. So in any pairs you see Australian dollars, it should be buying. Yeah. So that's all pounds AUD, Euro AUD will be selling, right? Because Australian dollar is the counter currency, but when Australian dollar is the base, it will sell. Yeah, we'll talk of AUD, JPY, AUD, USD, AUD CAD, AUD, New Zealand. So the rest of this one will be selling. Yeah. So we quickly rush into investor. I got into investing.com to see got interested to see the analysis and so what do you mean by interest rates? You know, the board members of RBA, you know, come to a consensus on where to set the rate. The traders watch interest rate every part of the world. The professional watch this interest rate, so that means there must be range. That is why that range in that meta trader, you see the range, you see the range, you see the big range, you see the range. This is upper range accumulation. So you don't trade when you got this. If you are trading, you want that is trading the news, you must trade the news in the right way, in the right manner, or else stay away from it. Focus on your on your price structure. Yeah. You see the range. See the range. So before the news here, they'll up, down, they will try to manipulate the market ups and down. See it? Try to manipulate the market up and down, taking out highs of this place, you know, coming down to take another lows, take up the highs, you know. So they manipulate the ranges and busy accumulate. The market makers are busy accumulating the highs and the lows of that range prior to the break of the release of news. Yeah. So you should be very careful. You stay away during that period. Stay with you definitely, except you know how to trade with them, how to trade the range with them. But you don't bother yourself, but there won't be much liquidity during that period. There's not much liquidity. This Asian, it falls on Asian range, Asian session. So you don't bother yourself about that. So now you got to here, you see this is the Arabic, it's coming out on investing.com, 4:30 a.m. It's a high impact news. I mean, it's showing red, right? So a higher than expected rate is positive, which is bullish for the AUD, while a lower than expected, if this falls below 0.10%, it will be a massive sell. Oh, sorry, a massive sell. Yeah, it will be a massive sell on AUD. Yeah, it will be a massive sell because there is no higher interest rate delivered on the fund borrowed by Australian government. So the investor will lose hope and they will draw their capital from, you know, go to another currency that has that delivers a higher interest rate. So that's what they do. So Australian dollar will be falling, but this right now is unchanged. So the interest rate was released unchanged. So it's a boost to them. They will leave their fund, you know, the investors will leave their fund. Yeah. So now, how do you trade this? That is most important. How do you trade this? In case if you want to, how do you use the AMD liquidity inducement pattern to checkmate the activities of market makers prior to the news and during the news report? How do you use this? We've given this for you guys free of charge. Really for free of charge. Now, let me first show you the pattern you must. We have been trending on my forum. The liquidity and inducement pattern. If you are selling, your focus must be what? Must be on this pattern. You must master this pattern. If you are selling, if you are buying, you must focus, you must master this pattern, right? This is the double top. The liquidity grab above the double top, we crash the market. Then this is a swing high. A liquidity grab above it, we crash the market. Then trend line liquidity, also known as a declining highs. The highs are coming lower. So the market makers are busy accumulating the highs side because of the stop losses that are placed above this place. They are busy collecting those stop losses, and once they finish collecting, the price will move to the opposite. So if you are buying, the stop loss below here will be taken out. The price will move in the opposite. Distribution of profits in the opposite. A swing high, a swing low here, then price moves, it accumulates around it, then moves to take out the stop losses. This manipulation after this stop hunt or liquidity grab, market will distribute profit to the opposite. Now this is a trend line liquidity in ascending lows. So price, the market maker will be busy collecting the the stops below all these lows, Then after finishing that, manipulating the stops, you distribute profit in the opposite. So you must focus on it. That is first assignment you must do. How to recognize these patterns. You must master it in your head. Now, then you go to the charts. Let's see how this is played out in charts. How this plays out play. These are played out in charts. Yeah. So this is weekly chart of AUD, pounds AUD. You can see, we want to further show you what happened in the past, how the patterns were manifested in the past, so that when you see it in the future, you'll be able to understand that when those patterns are formed, you'll be able to know the next line of action. So here we got you see this range. This is the present. This is this is on the is a daily chart, right? This is a daily chart. Let's take it to weekly chart. This daily chart. Take it to weekly chart to see the rational bias, the higher time frame. See, this is weekly chart. You can see the inducement. So the price let's play it out here first. Okay. That's it. So this is weekly chart. So all these eyes will be taken out by market makers. See it? Can you see that? They took this place out, so as you get the price come back to it. That's why that reversal here. As you can see, the price was initially coming down before now turning upward because of what? Because of the liquidity grab that happens here above this high. Now it's weekly chart, you understand? So you have to go to just go to your lower time frame to see the zigzag. You don't enter this on weekly chart. It's for you to just identify the directional bias on the higher time frame. Then on weekly on a lower time frame, like 5 minutes or 1 minute, you will see the entry pattern. So there's a liquidity grab here. This is a hidden base this week, upper week. There's a liquidity grab here. So, and the price moves in the opposite. Liquidity grab and price move distributed in the opposite. See, it will grab, it will go up again. Took out these ones. Took out this high, this weekly high of this candle. Then it comes down. It comes down. Let me repeat it. You can see something there. Can you see something there? Whenever the high of the previous week is taken out, price the initially price will go down. Let's replay it. This is a high, right? Now, you see it. Let's see, once that place is broken, it's taken out. So the next stage will be what? Will be down. You see the withdrawal back. See withdrawal back. You see it? you see the next week of it, price came down because this previous week has taken out the liquidity high there. And so the next week of it, the preceding week, or the subsequent week will be down. Then it will now later move up to take out all this high, all this one side. Yeah. See it. So you have covered enough. That place there, it's almost about, you can imagine, almost about 125, no, sorry, 1,259 pips for that low alone, for that week, for the move down, for the downward move, right? Almost about 1,229 pips. And price will now move because the original trend is what is up. So it's going to take out this place and drop back. You see it? You see it? So we have the next week of it, we have this. We have this almost about 1,105 pips. 1,105 pips. You can see the move. You still came down. Then before returning over, you can see the move. So you can see the setup there. The price will move down like this. At the beginning of new week, it will move down. Now it will now finally go up. So it must reverse. You get a point now. So it must reverse. So if you got to 4 hours, you see that. You see that next one. So see it. Drop after taking out this one. Right? See this upper week. So we drop back. Another good move there. Downward. So you only just to form the range of upper and lower week. The range, this candlestick, the range. That was your business you will do. Just form the range, upper, the range. See it. So this forms your range. So whenever the price moves, whenever the price take out the subsequent week takes out the high, it comes to take out the high like this, and enter. So you expect the next week to be what? To the first move in there will be down. It will be down. Yes. So you expect it to be. So this, you is to mark out the range, the trading range, the high and the low of that week. So whenever price takes it out, it comes down. So this place now, we mark this place. We mark here. Mark here too. So we expect price. So, and this, you can imagine the huge drop. This huge drop. Ooh la la. Very huge. Very, very huge, because it has taken enough time. Took off this thing here. Enough time. Because of what this high, this low here was taken out. That's why you see this low was taken out. That's why this place went upward. So you just strategize yourself. See, forming a range there. Took out that place. Took out that place. Took out the high. Took out the high of this range, right? And what happened? It started moving down. See? Took out the high, started moving down. So that's what this is today now. This is this week, right? This is the previous week. The previous week has taken out the high of this place and the high of this previous week high. You say the previous week has been taken out, or this place has been taken out. And this place is double top. This is double top. So one candlestick move out, move up the whole liquidity. That's an inducement candle. So you expect this week to do what? To sell. That's what it's doing right now. That's what it's doing right now. That's what it's doing. Oh shit. Well, I don't know what I clicked that thing was popping up. Sure. So yeah, that's why this place. So whenever you got that, I'm just wanting to get this understanding and the part of this pattern very well. How price action is, how price moves. Oh, Jesus. Okay. I'm not a bet. Don't bet. Now, what do I do? I don't know what I killed at. Start coming up. So that's the weekly. Then we go to daily. Before the new, we just want to see how this plays out in the past. Yeah, in the past. So before this is today. Before today, this is 1st of February. Before today, you can see it in daily time. In daily time frame. Daily time frame. The high of this play was taken out. The price came down. So all this price range are marked out. Whenever the price hits this range, there will be a reversal upward. All this place you mark, I mark out. See this place. They are important liquidity zones in the lower time frame. Yeah, you will not see it in the daily time frame, but when you go to the lower time frame, you'll be able to see 100 pips, 150 pip reversal. When price hits out of this zone, out of that range. So that's what happens here in this daily. You can see it. This is a significant high in the past. So price took it out. As price took out this place, I think I put up this setup. Yeah, you have been following up. So price took up that place, and what do you expect? Price will start to see the fall, see the big fall, right? Because only one candlestick, inducement candles, long candlestick, when you took out a lot of, at the same time took out more than one double top, this place, no red candle in between, no red candle. So you should expect a huge fall, like what happened here. You see it, took out this place by this long candlestick, huge fall. This place took out this fall. So you expect that is what you fall down. Yes, see it, it fall. And yeah, for example, this place now took out the entirety of this. See, no blue line, no blue candle here. We took out this, Yeah, we come to this place and see the move. Yeah. So this place now, we are still expecting more sell throughout this week. We expect at least to come down to this place. Yeah. We say expect more sell throughout this week. So we say expect more sell throughout this week. So that's what I told that guy when I was taking him. So you now see price move in the opposite. Then later come down again. That's what we expect. So now, so we don't care about the news, but when the news comes up, we get to the chart and see the pattern. The news must fall into the pattern that is in place. It must fall into the pattern that is in place. It must fall into the pattern that is in place. So now let's get to 4 hours first. See how 4 hours was manipulated. So you should use you can imagine 4 hours move from 28th of January, because this place has been made a lot of liquidity grab there. Yeah. For hour. This is big bounce high. Yeah, so that's 4 hours there. So you can see the move. So let's go to MetaTrader to see what is play out. 4 hours. So you see the weekly stuff, right? This is the previous high. Imagine this. The previous week high. The range. This place. This is a new week high. You can imagine this place has been taken out. Then if you go back, you go back. If you go back, you can see this is a major high here. So and the same candlestick took off the entire previous high. This place, right? Yeah. So this place has been taken out. So as the last high has been taken out, what do you expect? And if you draw this place very well, you see that this is a trend line liquidity. Trend line liquidity. Like what I show you in that place, in that pattern, this trend line liquidity. Price comes up, take out the trend line liquidity and moves down. So that is what happens there at this place. Yeah. So that's 4 hours. So now we move to let's see 1 hour. One hour. So this is before today. Can you see it? For today. Can you see it? So as price was coming down, it's aiming this place to take out. This is Monday, right? What yesterday? You see it, price came down yesterday with that alert I gave you yesterday that AUD is dropping because of that weekly graph of liquidity. You know, so price started coming down yesterday. Yeah, I posted in the forum, you know, this opportunity I posted in the forum. Yeah, when I told my church member about that. Yeah. I posted it here. Yes. See it. Posted there. So who is smart? Who was smart enough to be able to grab that and trade into it? You know, if you are smart enough, be able to trade into that. Yeah. Yeah, this is church member. I gave him this after service, and I told him because he was still like, okay, so it's part of us. I told him, yes, good morning. I told him pounds AUD would drop. Yeah. Church member gave it to him, and it was wow. I just called the provincial choir to get to our church. Just called the provincial to go to our church to serve into my after church service. And that's what happens. What is reply? Watch now. See what Euro and Pampan doing now. Yeah, I do that. Then so that is the setup there. That is set up there. In one hour yesterday, so we started seeing pounds AUD dropping yesterday. So that means throughout this week, and the news was released. The news was released. The same thing. We follow the pattern. Prior to the news, we already have pounds AUD dropping. That I told you that market makers must have gotten insiders information from the news or one way or other. So they set this thing. So you don't. Yeah, so that's that. See, can imagine. So before, so we already have this. So and news came up. You can imagine the news hits here. This is one. When I got this 1 a.m. No, sorry, 4:30 a.m. I already know this will sell. So I didn't bother about that anymore. I already know it to follow the pattern. And it really worked like that. See, there was a range. There was a range. So you can imagine inside this range, we have we have the trend line pattern. Yes, trend line pattern. You see it, trend line pattern. And we have this. We have a lot of liquidity inducement pattern there. Double top, trend line pattern, trend line liquidity, and it was sticking out. You can imagine. See the move. See the trend line pattern. See the move. See the move. So those would have placed that traded the trend line. So they trigger every of their stop losses. You know, as you are selling, you are placing your stop loss, and your stop loss will indicate as a buy stop. Buy stop for market makers. So that's what it is interpreted as on your broker's platform. So you call them to come out. You call them that you want to buy from them at a higher price. So you have placed an order above this place, above the highs of the market. You have placed an order to buy here from the market maker, which is a foolish idea for retail traders. So they will come to grab up the whole thing here. So you have placed order, they are seeing those areas as a bulk of orders placed by retail trader to buy at that price level. So they will go there to take out those orders. And when they take out those orders, they will trigger your stop loss. So you trigger your stop loss and move the price in the opposite. You can imagine. So you place orders in all those high. See, so take out, can imagine price move when the news was moving. They already know what the news will take, but they will fail for manipulate all these highs and before, because they don't trade or they don't use stop loss. What they do is they have huge amount of money, so to accommodate any wherever, you know. So take out anything they have so $10 billion, you know, Federal Reserve, they are trading $10 billion at the time. JP Morgan, all those institution traders, $10 billion per trillion, maybe above. So they have enough liquidity, enough capital to accumulate anything. So they don't use stop loss. So what they do is you look at those highs and they take out the, because you already tend to buy. So they buy off the market from you at a higher price. Once they buy them off, they trigger your stop losses. So right now, and as the price moves up, I told the guy that price will crash. As it get to this place, I told him, watch out, that price will crash. That price will crash down. It will crash because they will finish taking out all the DC. By the time they finish and you start seeing a reversal downward, follow it, price will crash. I told him like that. And you can imagine what happens later on. You can imagine what happened later on. We are putting this and doing something somewhere. Yeah, this is it. Yeah, can imagine. So this is the graph of the news report. But because news is supposed to put the pounds downward, right? It's supposed to sell. But this time it was buying. So you can imagine at exactly 430, it was buying. So you can imagine why, but the interest rate came up as in unchanged. It's a positive news. So pounds supposed to be dropping while AUD will be moving high. But in this on your trade chart, it's a different ball game. So that's why you must trade the liquidity. You must trade the news according to the structure on ground. Yeah, follow them. You can't trade against them. You see, after this place, in 1 minute, this is 5 minutes, right? 5 minutes. As they grab out this place, let's go back to that 1 minute chart on that. Let me go back to that. As they grab out the liquidity here, you see it. So the liquidity here was taken out. Beam, double low, beam. Can you see it? They grab out this place here, this liquidity, this range low was grabbed out, and news came up. They must distribute what I said they have accumulated till this place. They must distribute for profit. They must sell off to make money and come back. you see the manipulation. They have accumulated enough assets from you. You've sold out to them at that level. You understand? They've come up. They have sold off. You've sold off all this place to them at that high. Sorry, they have sold to you at that high price. They have come up here to sell to you at the high price based on the order you placed, right, previously in the past. So they've come up, take up the whole this year, accumulate, is sold for you to you at the higher price. So when they have for that, they will do what? They will come down to buy at a lower at a lower price again. You buy at a lower price again, getting this place at a lower price. They buy here. Because that's what when you are selling, at the same time you are placing the buy, you see that you want to buy at a lower, they want to buy from you at a lower price. They come here, trigger all this thing. So they have taken out this liquidity low here. That is, you can imagine the price moves. The price moves. Imagine the moves there. Price move upward after taking out this liquidity low. So that you have to be very careful the way you trade the news. You have to be very careful. You don't jump into the news. At the instant of the release, you don't jump in. You wait and see the manipulation happen. So you can leg in with them if you understand how this pattern works out. You can leg in with them and quickly come out. Yeah. If I want to trade this, you don't put your account. Let me put my this in here. See this is a risk entry. Yeah, risk entry. It's a risk entry. Yeah, this is the confirmation pattern here, confirmation pattern. So at what level of Fibonacci? As CPA, you can imagine a CPA. So this thing will be here. If I didn't get this, I will go back and see the confirmation. If I don't get it here, so this thing will be here. My order is triggered there. This is 11 pips, 80 pips, and the so I'd rather put my decision here. If I want to risk news, I want to risk it. If you want to risk it, that's how to do it. You see, this is a liquidity graph and confirmation entry here. It started from here. Right. First entry started from here. This is a confirmation entry. Confirmation entry here. You can imagine that move. See your listing will be triggered here. This is 16 or 17 pips. You may not take that and we want to look for a very close edition. Yeah, the hard guy give me 10 pips. 16 pips if you trade on company accounts, it's okay. 16 pips. Your limit, your drawdown limit, maybe $500. You can take it, $160. Just risk it. Or thereabouts. Or use 0.5 loss size. So and it has delivered 97 pips from this place. You can imagine from this place it has given you almost 97 pips. 97 pips is taking out 98 pips. So that is the trick. I told that guy that this thing will crash down. It will crash down. You can see it is starting crashing down. You see at the top of it, as I got my DC here, at the top of it, see it? Oh God, why this is? See? This is confirmation pattern. Confirmation comes with BM. Confirmation pattern. What is this in there? This is huge. This is huge. It's only 4 pips, and we've already captured to this place 91 pips to 92 pips. Price has price moved to that place? Let's check. Oh, below it, because it's coming down to grab this place, and that's why you see this rally. That's why you see this rally as price grab this place out. You see it? That's bottom of that news as it grabbed it out, because the market must come back to now to trade the news. They first manipulate, they're now coming to trade the news. You can see it. They manipulate to their own gain. When they get to this place, they started dropping this because they've accumulated enough this in the past year. You see, and once they finish that place and they started drop now to the news, to the intent of the news. Okay, so, and once they got to this place too, when they got to this place, they will grip the whole, take out the whole stop losses here. People that buy and they put their stop there. So this place will be set stop. He says stop. You want to sell to them. You are telling them to come and buy from you at a lower price. So they will come back to take this order. They take this order, they trigger the DC, and if they bought, they distribute price. My price is now being distributed. This is your entry with them. So I would rather enter here. I would rather enter here. You can imagine that. So low. Can imagine big. This is a big trade. Almost about this is 30 pips to deliver what? To deliver 53 pips. 3 pips to deliver 53 pips. Can you imagine? Why we use just how many pips here? How many pips here? If this is the only one you enter, this is your stop loss. Almost about 4 pips to get how many pips? 96 pips. That's almost how much for what's the reward risk reward ratio? It's a very high probable this 90 94 thereabouts, 4 pips. Times 24, that's your reward. Times 24, that's okay. You can imagine. Then here we got 2 pips, Abi. Yes, got 2 pips. Risk there. Or 3 pips rather. So then we get this. We got 53. My mind, so you can use that one below to scalp up and down. See the pattern, it works. According with the pattern, you can use it 54 divided by 3. 18 times 18, that's your reward. Yeah. So it has grabbed all that, this below here. So if we go to right now, we have another entry here. You can still scalp this place. This is liquidity grab of this place. Grab of this place, and that's how to trade this. Now you can see that in 15 minutes, we go to 15 minutes, this you can imagine, you can see it. Liquidity grab of those high, and price moves to the opposite. And because formally you must have, prior to the news, you must have got this confirmation, this right, and that's CP upward, downward clicking. So that's how this place. I have to trade. You can use that to trade your risk. Yeah. So after grabbing this place, grab this place, you can see the move. So you go to the lower time frame, then 1 minute to take out with them. Yeah, see this thing. Move. Test to give you your entry pattern. 53. Yeah, 53. So that's how you can use it to trade, the pattern. That's how it delivers. Imagine, see it. Yeah. So that is that. So